All right, diving right in today, we're going to be looking at how the stock market can be understood, maybe even predicted, using something inspired by, well, birds and fish.
Oh, that's an interesting way to start. You've got my attention.
Yeah, it's all about this thing called particle swarm optimization, PSO for short, and how it can decipher stock price patterns from all that time series data.
I see where we're going with this. So using nature to crack the code of the market. Love it.
Exactly. And our guide for this, well, it's this essay by Jörg-Owe, all about using PSO to reveal those hidden stock price patterns.
Schneppad, huh? Well, they're definitely onto something. The stock market can feel like a chaotic flock of birds sometimes. Maybe there's more order there than we think.
Right. So PSO is basically this idea of like a bunch of these particles all working together, to find the best solution to a really complex problem. Like they learn from their own little wins and also from watching what all the other particles are doing.
Ah, so like a collective intelligence thing, like a hive mind almost. Each particle contributing to the bigger picture.
Yeah, exactly. It's like this team effort to find the absolute best answer in this, like huge and super complicated space, like the stock market.
And the stock market is definitely a huge and complicated space. So many factors, so much data to sift through.
Absolutely. So before we really get into how PSO tackles stock prices specifically, maybe we should take a step back and just, make sure we understand what PSO is at its core.
Back to basics. Sounds good. Lay it on me.
Okay. So the essay mentions that PSO is actually, it's rooted in like observing the social behavior of, birds in a flock or fish in a school.
Ah, so it's like a biomimicry kind of deal,
Yeah.
applying nature's solutions to our own problems.
Right. So what's the fundamental connection, between these like natural swarms and the algorithm itself?
Well, think about it. A flock of birds. They can find food incredibly efficiently, right? But there's no like one bird in charge calling the shots. Each bird kind of adjusts its own flight path based on what it sees and also on the movements of the birds around it.
Oh, that's a good analogy. I never thought of it like that.
It's all about that shared awareness, that distributed intelligence. And PSO mirrors that. Each particle in the algorithm, it represents a potential solution, right?
Okay.
And it has this thing called velocity, which is basically like the direction it should move in to get a better result.
So they're all like constantly moving, searching for the best solution, right? Like restless little particles.
Exactly. It's an iterative process. Like they adjust their movements based on the best solution they found so far, their personal best, and the best solution found by any particle in the whole swarm, the global best.
Ah, so there's like this individual learning and this group learning happening at the same time.
Exactly. And that's where it gets really cool. In every step, every iteration, a particle, it updates its velocity, its direction based on three things. Its current velocity, its momentum, you could say, and how much it wants to go back to its own personal best solution. And then also how much it's drawn towards that global best.
That's fascinating. So it's like sticking with what worked for you, but also being influenced by what's working for the group as a whole.
Precisely. It's a balance, right?
Yeah.
And the essay even gets into the math a bit, mentioning things like inertia weight and acceleration coefficient.
Oh, yeah, I saw that. Inertia weight, acceleration coefficients. Sounds pretty complicated.
Well, yeah, it gets a bit technical, but think of it this way. These are the things that fine-tune how much a particle explores new options versus how much it exploits what's already known. It's all about finding that sweet spot.
So it's like a constant back and forth between trying new things and sticking with what works.
Exactly. And a little bit of randomness thrown in to make sure they don't all get stuck in the same rut.
Oh, so that's what those random numbers are for. Like a little bit of shake-up.
Exactly. Just a little nudge to keep things exploring. And, the essay highlights some really appealing aspects of PSO. Like, it's relatively simple, and it can find good solutions pretty quickly.
Yeah, I was struck by that too. Especially compared to like some of the other, crazy complicated optimization methods out there.
Right. It's got fewer parameters to tweak, so it's easier to understand and to get it working. And in a lot of cases, it just nails a pretty good solution really fast, which is, that's a huge plus when you're dealing with tons of data, like, years of stock market data.
Absolutely. Speed is definitely key in the stock market. But the essay also points out that it's not like, a perfect solution for everything. There are some challenges.
Right. Nothing's perfect. Right. One thing that Schneppad mentions is that it can have trouble scaling up to like truly massive problems.
Yeah, that makes sense. Like the bigger the problem, the more particles you need, the more computing power you need.
Yeah.
Right.
Exactly. As the problem gets more and more complex, the resources required can really shoot up. It's something to keep in mind, for sure.
Okay, so we've got a pretty good handle on PSO now. But to really see how it applies to the stock market, we need to talk about, the other half of the equation, time series data modeling.
Time series data, the bread and butter of the stock market, right?
Right. And the essay starts by, defining it pretty simply as, data points that are collected over time.
Which is exactly what stock prices are, right? Data points tracking how a stock's value changes over time.
Exactly. But what are the key characteristics of this type of data, the things we really need to understand?
Well, the big thing with time series data is that the order matters, right? Unlike, say, data about a group of people where you can shuffle it around and it doesn't really change anything.
Right. It's all about the sequence, the chronology of the data points.
Exactly. And when we model this data, what we're really trying to do is find the patterns, the underlying patterns that can help us understand and maybe even predict how things will change in the future.
And Schneeppert mentions these three fundamental components of time series data, right? Trend, seasonality, and noise.
Yes, the three amigos of time series analysis.
Okay, so trend, that's the long-term direction, right? Whether the data is generally going up, going down, or just kind of staying flat over a long period of time.
Exactly. It's the overall trajectory. Think of it like the long-term rise in, say, the price of gold or the gradual decline in, the sales of landline phones.
Okay, I get that. And seasonality, that's those predictable patterns that repeat over and over, right?
Yeah.
Like every year or every month or even every day.
Right. These are the cyclical ups and downs that we can kind of anticipate, like the spike in online shopping during the holidays or the dip in tourism during the off-season.
It's like the rhythm of the data. The heartbeat, almost.
That's a great way to put it. And then, of course, there's noise, which is basically all the random, unpredictable stuff that doesn't fit into the trend or seasonality.
Right, the unpredictable stuff, the outliers.
Exactly. It could be caused by anything, really. A sudden news event, change in weather, even just random fluctuations in human behavior.
So it's like trying to find the signal through all the static.
Precisely. And the essay also talks about this concept of stationarity, which basically means, how stable the statistical properties of the data are over time.
Yeah, that one sounded a bit technical to me. Like, why do we care if the data is stationary or not?
Well, it's important because a lot of those classic time series models, they work best when the data is stationary. Like, if the average value of the data is constantly shifting, it throws those models off.
Oh, so it's like trying to hit a moving target.
Exactly. And sometimes we need to, transform the data to make it more stationary before we can use those models effectively.
So it's all about prepping the data, making sure it's ready for prime time.
Right. And the essay even mentions a bunch of different time series models like ARIMA, SARIMA, exponential smoothing.
Yeah, I saw those too, but I'm not sure I understood what they all do.
Don't worry, it's a whole rabbit hole. But basically, each one is designed to capture different types of patterns in time series data. Some are good at capturing trends, some are good at seasonality, some are good at handling sudden changes.
So it's like having a toolkit, and you pick the right tool for the job.
Exactly. And now, the million-dollar question. How do we take PSO, this cool optimization tool, and apply it to time series data, specifically for predicting stock prices?
That's the big reveal, right? Let's get to the good stuff.
So here's where it gets really interesting. Schneeppert talks about how PSO is being used to, supercharge machine learning models, especially these things called LSTM networks, which are, really good at handling time series data.
LSTM networks. That sound familiar?
Yeah, they're a type of neural network, those artificial intelligence things that everyone's talking about. And they're particularly good at learning from sequences, which makes them perfect for time series data.
So PSO is like the secret ingredient that makes these LSTM networks even more powerful.
Exactly. It helps fine-tune those LSTMs to squeeze out even more accuracy. And it does that by optimizing, all those little settings, the hyperparameters that control how the LSTM learns.
So it's like fine-tuning the engine for maximum performance.
That's a great analogy, and the benefits are pretty clear. You get potentially more accurate predictions, which is, kind of the whole point of stock market analysis.
Right. More accurate predictions mean better decisions, potentially bigger profits.
Exactly. And PSO is also fast, which is crucial in the world of finance where, milliseconds can matter.
So speed and accuracy, that's a powerful combination.
It is. And PSO is also relatively lightweight, computationally speaking. It can handle those massive beta sets without breaking a sweat.
So it's efficient, it's fast, and it's accurate. Sounds like a winning formula.
It does, doesn't it? And the essay even mentions studies that have shown like actual improvements in prediction accuracy when PSO is used.
So it's not just theory, there's real-world evidence to back it up.
Exactly. And it's not just stock prediction either. PSO is finding its way into all sorts of applications. Schneppat mentions image processing, clustering, even training other types of neural networks.
Wow, so it's like this multi-purpose tool, a Swiss Army knife of optimization.
Exactly. It's a testament to the power of, drawing inspiration from nature. Those flocks of birds, they're onto something.
Okay, so we've talked about the theory, but let's get down to brass tacks. How is PSO actually being used in the financial world?
Well, the essay mentions some interesting case studies involving both stock price prediction and portfolio optimization.
Portfolio optimization, that's like figure out the best way to allocate your investments.
Right. Like how much to put in stocks, how much in bonds, how much in real estate, that kind of thing. And PSO can help with that, especially when you have a lot of constraints like a limited budget or a specific risk tolerance.
So it helps you find the best strategy within your specific parameters?
Exactly. And one of the case studies mentioned focuses on the Japanese stock market, the Nikkei 225.
The Nikkei, yeah, that's a big one.
It is. And in that study, PSO is used to optimize a portfolio of stocks from that index, trying to find the combination that would maximize returns while minimizing risk.
So it's like a balancing act, trying to find the sweet spot between risk and reward.
Exactly. And PSO can navigate that complex landscape really well.
And then there's the whole PSO-LSTM thing, right? Combining PSO with those powerful neural networks.
Right. That's another exciting area. In those models, PSO is used to actually optimize the structure of the LSTM network itself, making it even more powerful for predicting stock prices.
It's like supercharging an already supercharged engine.
Exactly. And the results are pretty impressive. These PSO LSTM models, they've shown really good accuracy in predicting stock prices across different markets.
So it's not just a one-trick pony. It works in different contexts.
Right. And it's not just about individual stock prices either. PSO can be used for, like, broader market analysis, identifying trends and patterns that might be missed by other methods.
So it's like this holistic approach, looking at the market from multiple angles.
Exactly. And it can even help with things like risk management, identifying potential problems before they blow up.
Okay, so it sounds like PSO has a lot of potential. But I'm sure there are some challenges too, right? No system is perfect.
Of course, there are always challenges. One big one is the computational resources. PSO can be pretty demanding, especially for really large problems. You need a lot of computing power to run those simulations.
So it's not something you can just do on your laptop.
Maybe not for really complex problems. And then there's the issue of interpretability. Like, sometimes it's hard to understand why PSO makes the decisions it does. It can feel like a black box.
Right, you want to be able to trust the results. And that means understanding the reasoning behind them.
Exactly. And then there's the whole practical side of things, like integrating PSO into existing systems, keeping the models updated, dealing with all the data.
Right. It's not just about the algorithm itself. It's about the whole ecosystem around it.
Exactly. And PSO itself, it can be tricky to get right.
Yeah.
Choosing the right parameters, knowing when to stop the simulation, those are all things that require experience and expertise.
So it's a powerful tool, but it's not a plug-and-play solution.
Right. It requires careful planning, implementation, and ongoing maintenance.
But despite those challenges, the future of PSO in finance looks pretty bright, wouldn't you say?
Definitely. The essay talks about all these exciting directions for future research, like developing hybrid algorithms that combine PSO with other techniques.
Oh, like combining the best of both worlds.
Exactly. And then there's multi-objective optimization, which is all about handling situations where you have multiple goals, like maximizing returns while minimizing risk.
Right, because in the real world, it's rarely just about one thing.
Exactly. And then there's research focused on making PSO even faster, which would be huge for applications like high-frequency trading.
So even more speed, even more accuracy, the possibilities seem endless.
And Schneppat even mentions expanding PSO into new areas of finance, like cryptocurrency and DeFi.
Oh, so taking on the Wild West of the financial world.
Exactly. It's a natural fit, given the volatility and complexity of those markets.
So to wrap things up, it seems like PSO is this incredibly powerful tool for understanding and predicting stock price patterns, but it's also this evolving technology with, its own challenges and limitations.
A perfect summary. And I think Jörg-Owe Schneppat's essay really highlights, just how much potential there is at the intersection of nature-inspired computation and the financial world.
It's like using the wisdom of flocks and schools to navigate the stock market. It's a pretty mind-blowing concept when you think about it.
It is, and it makes you wonder what other natural phenomena might hold the key to unlocking the secrets of the market or, any other complex system for that matter.
It's a great question, and I think it's one that will keep researchers and investors busy for years to come. So to our listeners, we leave you with that thought. How might techniques like PSO reshape our understanding of the financial world? And, how might they change the way we invest in the future? Thanks for joining us for this deep dive into the work of Jörg-Owe. It's been a fascinating journey.
Absolutely, a real eye-opener. And who knows, maybe the next big breakthrough in finance will be inspired by something as simple as a flock of birds.
Until next time.
See you then.